and welcome to Thank God It's Friday. This week, I'm in conversation with Andrew Holland. He is the Chief Executive Officer of Avendus Capital Alternate Strategies. And we're here to talk about what's really going on with the Indian equity markets, especially given the fact that they are edging towards lifetime highs. Thank you for joining us, Andrew.
My pleasure.
Well, so I'm going to start off with the benchmarks, of course, moving towards lifetime highs. A lot of broader market indices already are.
Yes.
But the question then is, when does one start worrying about valuations?
I think we've been worried about valuations actually even 5% lower because earnings really haven't been kind of catching up with the valuations.
Right.
And I think most analysts are saying 20% earnings growth for full year 17-18.
Right.
They've been saying that for the last 3 years actually,
Right.
but I don't think we can do 20% in that year. And so I think valuations are at a point now where the risk is to the downside rather than to the upside.
Right.
And our market's really being dragged up by two things. One is global markets, right? But it's not because the fundamentals have changed in India. It's just that global markets have been moving up. The second is you've had a series of one-off events, whether it's HDFC in terms of the limits.
Yes.
The kind of Access Kotak kind of talk of some merger, Reliance yesterday, and then
Right.
TCS, Emphasis because
Right.
of potential. So all of these have just been heavyweights in the index and just helped drag the market a little bit further
Yes.
along with global markets. But valuations are not really justifying where we are today.
Right. So Andrew, I was going through some of the things that you've spoken about and talked about as well. And of course, adapting to GST is going to have its own pains when it comes to the earnings. Most of the downside of demonetization is already played out. The question then is, when does the investor start seeing a robust, maybe a high double-digit earnings growth?
So, you say demonetization is over, but, meeting companies, there's some areas where they've got back to where they were in terms of kind of trade.
Right.
Since last November. But most industries are saying it's starting to pick up, but it's not V-shaped, it's more kind of U-shaped.
Right.
So they're nowhere near the kind of levels they were prior to November.
Right.
So that's the first point. So it's going to take a gradual rise, and by the time we finish that, it's time to implement GST, right?
Right.
And no one's ready. I mean, large companies will say they're ready, but I can assure you that the mid-size, small, all the suppliers, manufacturers are not ready.
Not ready.
And there's a lot of systems that have to be put in place. So this has a real potential of halting the economy again. Minimum 3 months,
Okay.
possibly up to 6 months. But
Right.
minimum disruption is going to be 3 months. So what you could see is companies saying, okay, I'm not sure how this system is going to work. And you see destocking throughout the whole kind of chain
Right. Right.
to see how things start to move. Because you're not going to
Right.
go ahead and say I'm going to stock all these cars on the basis that everything's going to be smooth.
Right.
So I think that's another potential problem. So I really don't see kind of double-digit earnings growth, depending on when GST is implemented. But let's say it's implemented July the 1st.
Right.
Then I worry it wouldn't be looking till the kind of January, February, March 2018 quarter where you'll start to see that recovery in earnings.
Right. So we've had some indications of what Donald Trump has in mind with respect to his trade policies, but we're also looking at elections in Europe, specifically in Germany, France, and Netherlands. What is the importance of these elections to Indian markets, if at all, and what does it mean for the rupee?
So let's start with President Trump, because actually next week's a quite important week. He'll be making a speech to the Congress which outlines the kind of what he's going to be doing over the next 4 years or so.
Yes.
And that will include his big tax incentives.
Right.
So it's a big week next week. The Fed came out last night and said, maybe fairly sure we're going to do something, but not really telling us when. So in France, with the elections end of April, results early May, Marine Le Pen has said, if she wins, that the French franc will come back, and we're going out of the European Union. So,
Yes.
I can't say if that happens, but let's say it does. Then, does that mean that Germany will go to the Deutschmark? And then what's left in the euro? In the euro is going to be left Portugal, Italy, Spain, and probably someone else. Which probably means the euro, where it is today, would probably be nearer to 40.
Right.
So the disruption it has for those weaker countries will be huge, absolutely huge.
Absolutely.
So it's a big event. So we'll have to watch the opinion polls as we get closer to see if the change that we saw because of Brexit, the change that we saw because of President Trump being voted in, is going to play out in France as well.
Right. And of course, that also brings me down to foreign fund flows in India, because there's been a little bit of return in February, but not as robust as what we've seen in the previous year.
Yeah.
And with the yields moving up, at least we're expecting interest rates to go up in the US. Will foreign fund flows remain tepid, and could we actually expect them to taper going forward when it comes to India?
Well, that's a good question. So one of the things that we are more excited about is a move away, or potentially what governments are saying is moving away from monetary policy to more fiscal policy, so fiscal spending, and alongside that lower corporate and personal tax. That's a global factor, right? So it means that global growth should start to pick up, rather than throwing money in and getting 2 to 2.5% global growth. Fiscal spending, lower taxes could get you to more 4% global growth.
Yes.
Okay. Now India, from a FII flow viewpoint, we're at the back end of flows, because if I'm running an emerging market fund, I'd want to buy a South Korea or Taiwan, who are warrants on worldwide growth, right? Because they're big exporters. India's a domestic-driven economy, so we're not going to benefit from all of that.
Yes.
Right? So flows will go to those countries. We'll get some, because emerging market funds will have to have some weightage, but it's going to be a trickle rather than and also because valuations are so high.
Absolutely, yes.
It's difficult for for foreigners to say, okay, I think India's cheap anymore, because it's not.
All right. So talking about internal factors too, how much can the banking system transmit when it comes to interest rates now, especially now that the RBI has changed its stance from accommodative to neutral, which actually means that they could move either ways going in?
Well, you see, let me think about two things. One is that, yes, the banks are sitting on a lot of cash, so I think they can also bring rates down to corporates. But corporates, it's not as though capacity utilization is running at 80-90%. We're still at kind of 60. So you don't need to go and build a new plant yet. So there's no need for anyone to rush out and start borrowing from the banks. So it might be more working capital. But the problem is that the PSU banks still have a huge problem on their books. So even if they could do deals, right? So, if you talk to some companies, say, we wanted to kind of sell this asset, right? But the banks don't want to take that haircut. So you're in this catch-22 situation at the moment. The banks are so laden with, and they're not saying, okay, I'll just take this off my books, because they know it's going to be a problem for them in terms of capital ratios. So we're in the problem that banks is the center of this problem, and no one's doing anything about it.
Right. So, I mean, from whatever I've read, it's evident that you're not in favor of PSU banks as much as you are in favor of private banks, but how would you put that as against something like a non-banking financial?
So the non-bank financial companies I think will continue to do it. So here's the thing, right? Private banks will take market share from PSU banks, partly because of technology and the strength of the balance sheets. Okay, so PSU banks are going to stuck, and then the non-bank financial companies will come in and start eating into their business as well. So all of the time, doing working capital loans, whatever the PSU banks were trying to do, they'll just keep. So they're going to keep losing market share unless they very quickly reinvent themselves. Which doesn't look as though they're going to.
Right, absolutely. So, and of course, I have to address the telecommunications sector because there's so much happening. We are looking at a lot of consolidation there. We have Bharti Airtel, Telenor, Reliance Jio, and of course, ideas and merger talks with Vodafone. It is apparent that mergers, at least for now, could be to a certain extent beneficial for them. What I'm also looking at is the consensus ratings and the target prices are not very encouraging. So, what is your rating of the sector?
So first of all, let's go to your last part of what you've said. Is that I think most analysts again were so negative because of reliance factors on the industry that they just had no expectations of anyone making any money, and therefore the target prices were quite low. Now all of a sudden we like what Reliance is doing,
Right.
Or the market
Yes.
likes what they're doing.
Yes.
And this is great stuff. I mean, this has been known for a long time,
Yeah,
right?
yeah,
It's
yeah.
not as though we've woken up and it's something new. And then this consolidation is, 2 and 2 equaling 4.5, right? It's,
Right.
I'm not sure it's going to equal 3, right? Because, you're trying to put together, very big companies, and then they're going to say, what do we do next?
Right.
So then the battle begins again, right? So the battle might be over for in the short term, but the war has not been won.
Right.
And I think, Reliance will look at some of these mergers, I'm sure, if they do happen, and they haven't even happened yet,
Right, yes.
and say, we need to do some stuff here to, one, take market share, but also, when you're merging, a lot of pain can be kind of helped kind of in terms of just by pricing, and as your merger goes through, you're cutting more costs to try and compete, because you've got two companies which are, one, not doing very well, right, because of the competitive nature of pricing, and then as you try to merge, two different companies, two different ways of working, and then you've still got pricing pressure.
Right.
It's the way that you manage to get your own market share and hurt the competition.
Right.
So I'm not sure, I want to be, all is over for the telecom sector, and it's like saying consolidation is the best thing, right? And so if that was the case, then every sector should have consolidation, right?
Right. Absolutely. So in that case, I mean, we've spoken about private banks. What are the other areas in the market that you like right now?
Well, actually, I mean, I've been very negative on the IT sector for a long time.
Okay.
And the one thing that I said repeatedly, and I'll repeat it again, said the only thing that would start to excite me. See, the valuations of IT companies, which even before the recent run-up, were too high for what I believe is a commodity-type business.
Right.
Right? They're trying to reinvent themselves too in a changing world, and it's not been working. Right? You just see volumes and revenues and margins increasingly under pressure. So I said, what would make me more excited is if they did two things: increase the dividend yield, i.e., you have to pay more dividends,
Right.
and/or do some buybacks. Give me my money back,
Right,
because
yes.
you're not being able to do anything with it yourself. And we saw that with Cognizant, and obviously we've seen it more with TCS. But TCS is probably more beneficial for Tata Group than it is for the individual, because the shareholders aren't there. So I think this is where Emphasis will probably have to do something, Vipro. So this is a theme that might play out. So at the end of the day, when you look at companies where that decade of growth has gone, you've got to try and say, how do I value them now?
Okay.
No, they've got very strong cash flows. Good.
Right.
It's like, so it becomes like a utility. Now, utility, I want to value on my dividend stream,
Yes.
right?
Yeah.
And no one's paid dividends
Right.
like a utility does. I'm talking about the West now.
Right.
So there's going to be a switch. The reason for me to buy it is you're going to give me something. It's
Right.
either dividend yield, it's a growth, dividend yield, or buyback. And it's a combination of those. Now, you can't give me growth like you used to, so no, give me yield.
Right. So in that case, what are the areas that you'd like to go short on?
So it's becoming increasingly a little bit more difficult. But what I would say is that commodities, whilst it's had a great run, and I'm not overly negative, I think there could be a little bit of pain coming in the commodities industry. Because whilst we're all saying that global growth will pick up, I think there's been a lot of speculation in the China market actually with commodities. I don't think demand, from what I can read and see, is that strong that commodities should be. So they might have been oversold at one point, or the prices fallen, but now I think they've overextended. So I think we could see a correction there. So probably commodities would be an area to use shorting or hedging.
Okay.
And pharma is going to be under a lot of pressure.
Okay. All right.
So the people picked up and said, because President Trump said, I want lower prices, right? Everyone thinking that's great for Indian pharma.
Right.
But we also said, which is the more important point, was that large pharma companies are not investing in new products because of lower prices, right?
Yes.
But it's really meaning imports,
Yes.
right?
Yeah.
So is there a border tax coming? Or do some of our pharmaceutical companies have to manufacture in the US?
Right.
So these are the kind of things which I think the market didn't look at, decided to take the rosy part,
Right.
which is lower prices, so it's got to be good for Indian companies, and I don't think it is.
All right. I've been speaking to a lot of people out there, and a lot of them prefer consumer discretionary over consumer staples because consumer staples is simply very expensive. But I feel, and I look at the evaluations, and it's not any different for discretionary either. So should one choose between the both? Where would you stand?
So again, I'm just thinking this, in terms of, I don't disagree with what you're saying. Everyone, it's a crowded trade, right, to go in
Right.
consumer discretionary. So I'm thinking, is that where I need to be? So again, some things change which make you think about that change. So I would say that Hindustan Unilever was massively overpriced, right?
Yes, yes.
And have been that case for some time. But maybe after this, I don't know if it's a hostile bid or Kraft kept coming in, whether now they're going to have to look at things differently within Unilever and how maybe they're going to cut a lot of costs, rationalise the businesses, and this will flow through to India as well. So maybe there's an extra leg of margin growth here for Unilever going forward. I have to look at it more, but that's the kind of thing which could make me a little bit more positive. Again, they don't pay high dividends, they don't do any buybacks, so something's got to change.
Okay.
For me to want to, pay that kind of a multiple, I don't need to, and it's not got as good a growth as consumer discretionary. That's why they got similar kind of
Right.
ratings.
Right.
But this change could be the change I'd look at. And then if Unilever are doing it, then I can be assure you that Nestle and everyone else will start to look at
Right.
their business models as well.
Right. Well, I'm done on market questions, but I still have one question that's got to do with football. I can't not ask you this question. So many believe that the title race is all but done for the Premier League this season. Are you of the opinion? Are you also of that opinion? In that case, what about the other three spots for the Champions League?
So, obviously I'm only expecting Manchester United to take one of those three spots.
Yes.
So I think that's if you would ask me a month ago, I would have been a little bit more sceptical. But I think
Right.
we have momentum. We haven't lost in 25 games,
Right.
believe it or not. So I think we might be able to sneak in. It'd be great if we did. I don't expect any more than that.
Right.
And of course, this weekend we have the cup final with Southampton.
Right.
So hopefully we'll put one trophy on the mantelpiece this Sunday.
Would you like to hazard a guess about the other two places?
I would probably say, there's equally of teams that I don't like, but Tottenham and I would say Tottenham, and it's either Arsenal or City. I think probably City than Arsenal.
Right.
Yeah.
Okay. Well, Andrew Holland, it was a pleasure speaking with you.
Thank you very much.
Thank you very much for your time.
Thank you.
And as for you guys, we'll see you next week once again on yet another edition of Thank God It's Friday. Stay tuned and Bloomberg Quid.